Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. At the end of last week, the Australian dollar posts the Dragonfly Doji in the New York session and therefore has given the market somewhat a slightly firmer tone to the start of this week. Along with that, the market did bounce off the key level of 68.25 and from there has given, and also from the 60-day moving average, I must mention as well, is that the market is likely to stage a slightly firmer start to the beginning of this week. However, that being said, the technicals do remain heavy, so any upside attempt will likely end to a failure and therefore see another challenge to that bottom side of the range. A close under 68 cents would expose the region of 66.50-60. The euro also took the challenge to the downside as the market looks towards the region of 106.20. From the challenge has given some indication that from the hammer that's posted as well, we may see a small trek to the top side of the range, seen somewhere around 107.1525. But a little bit of a caution here is that if the bullish divergence can continue that we're seeing here, then we could see a rise up to 107.8090. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, reversed on Friday after posting a fresh 6-week high around 104.50-60 area, tumbled in the New York session to 103.55-65 and now trades at 103.70. In light of the pattern, if the dollar does manage to regain its momentum, as all eyes will be looking to the US FOMC minutes that the market also will be looking to as well, the US GDP, and the dollar may actually regain momentum and therefore put further stress back onto this downside. A break of 106.20 or more to factor close would indicate a descent towards 105. Looking at dollar yen, the market's posted a gravestone doji after the topside challenge was a little bit hesitant towards that 136 area after reaching around 135.10. Nevertheless, I do like the way the ADX is trending to the bullish case. The RSI not backing down with the MACD, so we should not rule out or abandon this topside level of 136 before taking profits. The sterling outlook took the challenge to 119.45 and was clearly rejected, but nevertheless the technicals are still negative. So therefore I feel the market will take another challenge to this bottom side, and if breached will give an exposure to 118. And therefore could see a slightly weaker sterling as the market progresses into the week, but if we do see a break towards 118 should find momentum and maybe even see some profit taking emerge from there. The call to the downside of 1,820 was reached on Friday, and the rejection from there has posted a hammer. Now we do need to see further confirmation to support this case to the bulls, and that is a break above 1,845 would give us a move up towards 1,860 to 66. Nevertheless, the market still is negative when it comes to the ADX, the RSI and the MACD. So we should not abandon this bottom side and only see this as a profit-taking move, as the bulls did come in quite sharply, but we may again see the downside challenge. Let's see if 1,820 can hold this time around. If not, then we're looking down towards 1,786 to 89. Finishing up with oil, well, the market reached its objective, which was at 75.60.80 and clearly rejected. But we're not quite out of the bear zone as the market still looks somewhat negative and therefore could see another challenge. A break of 75.60 would give us an exposure to $72 a barrel and reassess from there. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the great start to the new week.